Good morning, trading world. It is February 6, 2023, and this is my pre-market outlook and technical analysis for day trading the markets. I see some tricky price action over the next 2 to 3 weeks. By tricky, I mean swings in which you think the bears are back in control, then swings on the other side of that where you think we're in the beginnings of a new bull market. Neither will be correct over the next 2 weeks or so. But it is just the shift in momentum, that in-between area trying to figure out the new trend direction happening on larger time frames. If we go to a weekly chart, we can see here the weekly is looking to cycle back into overbought territory. And the monthly, which is actually pretty important right now, the monthly is trying to, well, not trying to, it's in a consolidation phase. And so in this consolidation phase, the monthly is actually in its rest area or halfway point. The halfway point is where consolidation happens, and it is possible to either, once we figure out this new trend direction, it's quite possible to continue higher or lower from here. Since this is the monthly consolidation or consolidating, expect to cover huge ranges over the next couple of weeks until the monthly decides its new direction. My opinion is that we consolidate up and down over these huge ranges over the next couple of weeks, then likely continue lower. There is money to be made here. The range is likely the entire main channel we are in. So it's best to divide that range into thirds and play the extremes. When we hit that lower third, that's where you go long in that lower third, then cover most of your position at the halfway point, keeping a runner. Cover your runner into the upper third and go short, and repeat the process in a vice versa fashion. My target for this swing down is around 407 to 405. With that being said, let's bring up the key levels to watch for today. And here we are back with the key levels of the day. Starting on the resistance side, we have our jack resistance at the 410 to 411 area, which at the beginning of the day is going to be pretty pertinent, whether we can break through this or reject back down. Then we have our queen resistance level at 412 to the 413 area. And then our king resistance 414 to the 416 area. On the support side, we have our jack support at 408 to the 407 area. Queen support 406 to the 405 area. And if you can remember, my target for this swing is somewhere between here, between that 407 and 405 area. Then we have our king support at 404 all the way down to the 401 area. The main thesis for today is bearish, closing below the 412.35 with a projected target low of between 411 and 402. The alternate thesis is bullish, closing above the 412.35 with a projected target high of between 412 and 416. The main channel we are in is from 397 all the way up to 416. Remember, this is the range that I'm looking at and telling you to divide into thirds and play the extremes. The main channel above where we are is 416 all the way up to 425. Last week, market strength and breadth opened, gap down, and continued down briefly before consolidating and shooting back up to the top of its range and trailing off sharply, then consolidating most of the day. I expect additional gap down in strength and breadth and maybe pinned lower for a while, then either today or tomorrow, consolidation and the beginning of a pop back up in strength and breadth and price action. We have harmony between the technical side, which is bearish, and the quant side, which is also bearish. I'm expecting to be able to put more faith into that measure today, as the market is not quite, well, I take that back. We never did go back and eclipse certain levels to where I could consider us out of that irrational state. So I take that back. We are still in pretty much an irrational state. With that being said, let's get to the scenarios of the day. All right, our first scenario is going to be our rounded reversal day type structure. We could get a continued push lower toward the Jack or Queen support area, find midday chop around either the Queen or King support before going back up with the same force or energy we went down with the first part of the day. That is our rounded reversal day type structure. All right, the next most probable scenario is going to be our trend day down, meaning we open gap down away from the previous close represented by the blue line. We find, we started the cash open with a push back up toward that previous close, and then we find resistance on or before that previous close, then begin the downtrend for the day. Just to make a note, it is quite possible that a majority of that downtrend has already taken place in the overnight pre-market session. So it may not be much further down that we go. So it may just seem like a low range bound day, but because we spend all of it below the previous close, that still puts it in the trend day category, even with most of the action or price action happening over in the overnight session. So this is our trend day down, and usually with the trend day down, the midday chop usually happens somewhere around the Queen or King support area, and we open up the second part of the trading day usually with what looks to be a continuation of the primary trend, but majority of the time turns out to be a head fake, and we get a reversal and a kind of rally into the close at some point. So that is our trend day down day type structure. All right, Our last scenario is going to be our expanded range day structure. We could have an initial push higher to the resistance before chopping around and chopping back lower and pushing back up a little bit into this larger time frame consolidation. And this is basically a consolidation. The larger the time frame the consolidation happens, the bigger the range that we are going to cover. So consolidation is basically just working back and forth, running in place. If you use the analogy of the market being a runner, it's that slow down, running in place, and taking that water break to build that energy up to continue forward, either higher or lower. So those are the scenarios that I'll be preparing for today. I hope this helps. Again, there is money to be made. You want to give yourself the gift of time, so that you have at least the 4, 5, 7 days that it may take to circle back if you enter on the wrong side. But hopefully you can cut your losses quick and jump back in at another place and not have to absorb those losses, even if on paper. It brings us to your most important job as a trader, which is to protect the capital that you already have. We do this by knowing and understanding the risk that we have on in each position, and we manage that risk in accordance to our account size. Wishing you a positive trading day. Again, I hope this helps, and let's go out and make it a great trading day. Have a good one.